Bhat also joins us, Joint Managing Director with Prabhudas Lilladher. Dilip, good afternoon. Thank you for joining us. I look at the HDFC or I look at the Max financial chart, and then the question which is puzzling us is that why the stock has gone up 100 rupees in 3 days. I mean, if the merger has been called off, that's bad news for shareholders.
Nikunj, always a pleasure to talk to you all, and particularly you. I think, it's a fair question to ask on the Max and the HDFC Life merger. Why should the stock price go up? But I think people are reading more, the obstacle that has come more as an aberration than as something which will permanently derail this particular merger. So I think even I would like to subscribe to that view that this particular merger will happen sooner than what all of us are now believe that it's going to happen. And I think that being the case, I think the merger will still play out in a very good way for both the companies. So I personally am also very bullish on Max Life also. And I think after the merger, possibly we will see a third HDFC getting listed, and possibly even if they come out with an IPO prior to that, that also is okay. But I think you will still get a third HDFC which will become quite a big giant in its own way, and possibly can show a reasonably very good growth thereafter. So I think taking all those factors into account, I still remain bullish on Max Life particularly.
So would you be a buyer at 700? I mean, it's almost not at 700, but if I look at the current market price, it's nearing there.
Well, it has run up quite a bit after a sharp fall, but I still feel that this is a stock which can really give a phenomenal returns over next 12 to 18 months.
Dilip, what else would you like to highlight as the key takeaway based on last 5 or 10 days of price action? I mean, it appeared a week ago that mid-cap stocks were in a spot of bother, but the force, I won't use the word vengeance, but the force which some of these stocks have come back, it's absolutely amazing. This market is just not correcting. The corrections are very sharp, but they're very short-lived.
Well, I think what you say is absolutely right. The correction is very shallow, and the recovery is pretty fast. And I think this still remains a market where people are looking to buy on dips and adding on to their portfolios. So as what you were mentioning about the mid caps, surely they are not cheap. They are in an over expensive zone. And that always becomes quite a good reason for any of the stocks to correct, as and when there is some small reason. But the liquidity flow is so strong, and more so for the domestic and more so for the mid caps. So in the domestic, you have the PMS, you have the mutual fund flow plus the HNIs. I think all put together, I think they are all looking to buy some of the select mid cap ideas. So as far as I am concerned, I think yes, one has to be a lot more cautious, maybe a little more careful, because mid caps are not available very cheap. But on a selective basis, I think one should still buy. Certainly not for the short term, because short term is you're going to become vulnerable without any doubt. But if you're talking about say 12 to 18 months, yes, I think I'm not too worried about the share prices recovering back. On a select basis, one should buy for a longer term.
Right. Dilip, coming on the commodity space, because in parts, and pockets, it's been doing its bit in the market. We'll talk about, of course, base metals in a second, but how are you looking at the momentum in tire stocks?
I think tire stocks has remained in the fancy now for quite some time. And I think more important is that maybe the performances have not been all that great in the recent times. But still, I think the optimism still remains pretty good. And we still think that the tire stocks from here on also can deliver a reasonably good financial numbers in FY 17-18. as compared to what they delivered in 17. I think if I'm correct, something like 14-15% can be almost the top line growth is what we think is very much possible on a blended basis. And I think the bottom line also will follow for quite a few of the tire companies. So I think that being the case, we feel that this particular sector will continue to attract attention in terms of investments.
And how do you look at Dilip, the momentum in other commodities and the large universe which is represented by Hindalco, Tata Steel, Vedanta, all of which have been ranked outperformers in the year thus far, and actually last year too?
Sure, I think the momentum is behind the metal stocks at the moment, though I'm not a great fan of the metal stocks because I think the commodities, it's very difficult to play unless or until you really time it very well. But I think the ratio of opinion that is really emerging on the metals is that this current year also is going to be good. So I think within this pack, we ourselves like Hindalco as well as Tata Steel, but Hindalco more so. I think even from the current level, we think that both in aluminum as well as in copper, they should continue to do well. And though we expect that the aluminum prices will correct from the current high at what it is at the moment, even if it corrects by about $100-$125, we'll see some impact on the stock price. But even at the slightly some of those lower levels, I think Hindalco will still make a very good growth in its profit. So Hindalco still remains the most preferred bet. I think it can give almost about 22 to 25% return. That looks very much possible on the cards.
Bank. Dilip, if you have to pick and choose between Federal Bank or Karnataka Bank, which one would you lean? I mean, one is Kerala, other is Karnataka. That's a broad geographical differentiation, but I'm sure there are other factors at play also.
Well, Federal Bank appears to be a lot more a structural story that's really going to play out. I think with a good management at the top and a good board to support it, and I think they have made a good top level changes also. I think they brought in a fair amount, good number of professionals to really see some of their verticals. So I think Federal Bank still appears to be the better of the two in my opinion, and I think and more so because Federal Bank is something which we are covering more closely than Karnataka Bank, and we feel that even from the current levels that can really give a very reasonably good return. Karnataka Bank also has quite a few of its financials in place, but I think that bank would still play out more as a strategic buyout kind of a thing rather than a structural story in place. Of course, their guidance has been extremely impressive, and I think that will be all the more reason why there will be a lot more suitors for Karnataka Bank, and there is a possibility of a strategic value getting unlocked out over there. I think that is how I would play both the banks.